Hey everybody, it's Trevor again with the Carlson team at Heritage Reverse Mortgage with another interest rate and market update. Now, I want to start off with a scenario. When you get sick, let's say you have the flu or food poisoning or something like that, it's interesting what we go through and our bodies don't really understand what's going on. You know, we can be freezing cold but also sweating at the same time. We can get the shivers and the shakes, and things just seem crazy. This is exactly what's happening in the economy right now and with the markets because there's a lot of weirdness happening. Over this last week, we saw the prices of gold and silver and Bitcoin shoot way up and then come crashing right back down. Movements that honestly are historic in their volatility. And and why is this happening? It's analogous of a sick body. The economy is sick, and it doesn't really know how to react to a lot of different things. And so that's really what's driving interest rates right now. As we look forward into 2026, the things that I'm paying attention to are things like unemployment, which seems to be getting worse from month to month. The stock market likewise is confused. It doesn't really know which way it's going from day to day. The delinquencies on consumer debts are also a concerning point. And so these are factors that I think are indicating that the economy isn't as good as they've been telling us in the news. And so we're going to want to keep our eyes on that. Another thing that's developed over the past few weeks is that Kevin Warsh has been named the next Fed chairman. He'll go into his tenure in May, and one of the things that's positive about that is that he is leaning towards favoring lower interest rates, and so we hope that that will also help consumers in terms of things like car loans, credit cards, and of course mortgages. Now, one of the concerns that I have that I want to put a caution out there at this point is we are almost at $39 trillion in federal debt. And so even though over the next few years, 2 to 3 years, I do anticipate that we'll see lower interest rates by which you should be able to benefit, my caution to that is that at some point that high federal debt will likely lead to high inflation and high interest rates again. And so make sure you take steps now as the opportunities come to refinance your debts, your loans. Make sure you take advantage of those because at some point that opportunity probably is going to disappear again. And so if you have any questions about what's happening and how you can position yourself better over the next few years, of course, give us a call. We'll continue to send these updates out every month. And if there's anything else that we can do to better your situation, we'd be happy to do so. Have a great month, and we'll reach out again next March or in March.